Now is the time for change. Doing business in the 21st century is made possible with Nkonki, external and internal audit assurance providers. Log on to nkonki.com to find out more.
The instant power of social media can make or break a company. A protracted labour issue can bring an industry to its knees, and a child labour discovery at a supplier can damage the buying company's reputation. Doing business today means you absolutely have to consider the needs and interests of your key stakeholders. Joining us in studio for a panel discussion are Chris Whittaker, Executive Strategy and Sustainability at Barloworld, and Sindi Zilwa, Chief Executive of accounting firm Nkonki and Director of various companies. I'm Lee Robertson. With me is Mervyn King. Mervyn, are stakeholders more important to a business nowadays than they were, say, 10 or 20 years ago?
No, but I'll motivate that. From the 19th century, the provider of capital to companies was in the main wealthy families, and went well into the 20th century. Those members of the wealthy family were also directors. So they were seen by other stakeholders, particularly the employee, as the owners of the company. Now, you can't own a person. Slavery was abolished a few hundred years ago. And we were brought up, nurtured on the premise of shareholder primacy, as if the company was this entity, artificial person surrounded by a moat of shareholders. And occasionally we'd let down the drawbridge and let another stakeholder onto the castle. Well, of course, that was not real. The real situation was that the company's always been a critical part of society and not apart from society. And I always give the example that Milton Friedman, one of the great minds of the latter half of the 20th century, 1970, said that the corporation's sole purpose is to make profit without deception or fraud. Now, I might be doing him an injustice, but I think what he was saying was it's not part of society, it's apart from society. But it's a critical part, and therefore the stakeholders are critical to the company, and the board, in order to direct the company correctly, needs to know and understand the legitimate and reasonable needs, interests and expectations of the stakeholders linked to that company through its business.
So, Sindi, would you say that companies are just more aware of their key stakeholders nowadays?
I think so. You know, when I look into the stakeholder management, it has moved now comfortable from a position of being just a process of let's know our stakeholders, let's understand this, to a level where it's part of risk management, because you're not doing that just to make sure that I've done it. You're doing it to make sure that you will be aware of the risks at the time they are starting to formulate, and you'll be aware of the additional opportunities, you know, that can come out of that, and you are able to deal with it in a manner that will sustain the company's success in the longer term and also its reputation amongst the community. So I think I'm quite comfortable that now it's no longer just, oh, let's do stakeholder management, but let it be part of risk management, and it should be dealt with it that way. And I do agree with Mervyn. Yes, long time ago it's been there, but people were not placing it on the radar screen as it is now. But the incidences and the events that have actually taken place have made people to recognize that stakeholder management is critical.
Chris, how do you at Barloworld see your key stakeholders? Are they inherent in your business?
Yes, and certainly I would agree with what's been said before, that the stakeholders have always been, I mean, customers and investors and suppliers and employees certainly have been part of an organization really right from the beginning. I just think that they certainly have become more assertive, more aware of their rights. I think the emerging trends, I think they've got higher expectations, and I think also because of the society changes, but also the social media and the media and so on really have now elevated the needs and the expectations to a position now where really they need to be addressed together on an ongoing basis in an organisation if you want to be sustainable. So not new, but certainly elevated and broader than probably was the case.
A company has so many different stakeholder groups. So how does the company decide, Mervyn, who is key to the business's future?
Well, there should be an ongoing communication with the stakeholders. And in every stakeholder group you have contractual stakeholders, for example your customers, your suppliers by contract. You have non-contractual stakeholders. The company could do something illegal which could amount to a delict, for example. And then you have your regulators as a group of stakeholders. So in each category of stakeholders you've got different, you've got major customers, medium customers, small customers. But you need this ongoing relationship with your stakeholders to learn of what are their needs, interests and expectations of the company. Likewise, you inform them what the company expects of them. Through that, the board starts in being informed by senior management of those needs, interests and expectations. The board then becomes aware of materiality. What is material to the business of the company? And because what is material to put in the integrated report.
Sindi, you're a director of many different types of companies. Is that always an agenda item on the board meetings where you get feedback from the stakeholders?
I think first of all, let me agree that the process is evolving. When I started joining the boards long time ago, long before the first King Code, that makes me look old, but I'm not old. This was not on the radar screen, but now things are improving as we go along, because first of all it gets done by generally by management and then by the subcommittee of the board. Then it becomes an agenda item on the board, meaning that the board and management are forced to look into what is the impact various stakeholders have on us and how are we managing them. And regarding your question as well, it is dangerous to sit back and say, no, this is key, that person is not key. I think a complete reflection of what impact does a particular group of people will have on the business will be critical. For instance, as an accountant, if you look into materiality, you look into who can close my business tomorrow. If I don't pay my installment, I fail to meet my covenants, this would actually go on. And management can easily focus on that, forgetting that if staff down tools for the next 3 months, like we have seen, that is much more dangerous. So I think that full comprehensive evaluation and reflection of who can make what impact on my business and be able to proactively start to manage the process would be effective for the companies.
Chris, what is your view on this concept of some stakeholders being key and others not?
I think it's quite tricky. I think it depends on your business and your business model and the impact that it has on the society and a broader audience than just your immediate stakeholders. But there are generic stakeholders that are always important. I mean, you're always going to get, you're always going to need your customers and your employees, your principals and your investors and so on. But I think what is important is that depending on where a business is in its point in time, depending on the nature of that business, I think some stakeholders can become more or less important, and it can change.
It's rather fluid.
But it's fluid, and I think I think the real point about good stakeholder management is being flexible and being proactive and being alert. And I think if you manage those things, you'll probably find that that your key stakeholders or the key issues that you engage stakeholders with might change. And one of the things that strikes me about stakeholder engagement is that stakeholders can come forward. And I think we should welcome that and encourage that. And I think depending on who comes forward at what time, that could also have an impact on what's material for your business at the time. So it's fluid, essentially.
Yeah, so it really is like knowing your business in the finer detail and seeing who is important and who's most important at various stages. Mervyn, you often tell me that regulators are becoming an increasingly important stakeholder group around the world. Why?
Absolutely. Let's just take the receipt of revenue as an example. Around the world today, one has, even 2 years ago, this wasn't mentioned, ethical taxation. Now again, we were all nurtured on the basis to comply with the law, and taxation was almost a backroom activity. That you had, let's say, a chartered accountant that headed up your tax department and calculated what you had to pay. But today, taxation, the average of the market cap of great listed companies is 80% is so-called intangible assets. which are not additives on a balance sheet according to international financial reporting standards. So you could actually have a form of avoidance, completely lawful, but society will see it as actually prejudicial to them who are paying their tax via the pay of deduction, a PAYE deduction, and you, the company, virtually paying no tax, and yet you're making billions of rands of profit. So quite extraordinary in just the last 6 months. We've had one of the world's most famous actors entered into a tax avoidance scheme with Liberty. And he has been criticized uphill and down dale, and the newspaper used the word exposed. He's been exposed.
And that was an international case.
And
not
went
local
on
company.
to say, but with a legitimate avoidance scheme. Exposed with a legitimate avoidance scheme. Starbucks went through a time about a year ago where some of their customers in the UK boycotted the Starbucks stores because Starbucks had arranged their fares so they paid very little tax in the UK. And there's another example that's happened, I read in the Sunday Times, another example of a tax avoidance scheme where one of South Africa's best known entrepreneurs and one of our more famous chain stores, namely Nando's, has been criticized the way they've arranged their affairs, and the article said legitimate avoidance and legitimate arrangement, and Mr. Enthoven said, we have paid the tax which is absolutely due, and I don't think that we've paid too little tax. So, but there's all this debate suddenly. So the question is, what does senior management do? Do they stand aloof from the regulator, or do you start building up a communication and a trust and confidence with your examiner, for example? So if you've got an avoidance scheme, do you go discuss it with him, or do you just implement it and wait? Because actually, your avoidance scheme can save you 100 million rand in taxation. But if it impacts adversely on your reputation, you'd lose a billion rand in market cap. So that's why I'm saying, in the last 2 years, suddenly, the regulator has become critical in stakeholder management.
Sindi, is this a big thing for companies in South Africa?
I think it is, because the powers of the regulators, maybe they were not there previously, but right now they do have the powers and they are biting. And some companies, for instance, in the industry, medical aid industry, would be placed under curatorship for lack of corporate governance. So if the company if the board and management at the time were focusing on corporate governance just being a compliance process, now it was a wake-up call, because the regulator is putting their business at stake to force them to comply. Same thing with financial performance, same thing with the complaints that are coming from customers. So I think the fact that regulators have got the powers and they are not scared to bite, I think it forces that to be on the corporate agenda and on each and every board to make sure that that relationship is managed well. So I do agree fully with Mervyn to say the regulators, they are rising up to become one of the most important stakeholders that you must make sure they must be kept informed, there must be trust, and there must be well communication.
Because it's all about reputation. We're going to break now, but do stay with us. There's more on the importance of stakeholders when we come back.
Nkonki has the professional capacity to deliver on your external and internal audit assurance requirements. Visit Nkonki.com